Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm currently monitoring. It's to do with the Nasdaq 100 index, which you can see here, or this is a CFD that tracks the futures price, or the price of the front month Nasdaq 100 index future. You can see here that in the last couple of weeks, or pretty much since the start of the month, we've just been going sideways really between the 12,800 and 3,200 area. But there are some optimistic technicals and actually potentially some optimistic sort of macro fundamental trends happening as well at the moment that we'll talk about. But I mean, we got the chart up, so let's talk about the technicals first. You can see here that we've found continual support at the 21-day moving average so far this month. At the same time as we're seeing the price getting squeezed below 3,200. And you could arguably say that there's a short-term uptrend going on as well. So this is a ascending triangle formation that we formed since kind of mid-March. Now, just from a technical perspective, these ascending triangle formations normally form ahead of an upside break. Now, sometimes you do get a break below the uptrend, and if we go below the 21-day moving average, and if there is risk off in the markets and all that kind of stuff, then that could certainly happen. Don't rule it out. Trade what you see. But these patterns normally form ahead of an upside break. Now, if we go to a slightly longer term time horizon, you can also see that this index is also moving higher within what I think is a pretty nice uptrend, or upwards trend channel, you could say. So, looking at it from this perspective, you've got an ascending triangle, you've got the uptrend, you've got all the major moving averages now moving higher in ascending order. We just had the 100 go above the 200-day moving average. We had the golden cross back in early March when the 50 went above that 200-day moving average. So, I think the risks are tilted towards further upside within this trend channel, and we could see a break potentially above 3,200, which could open the door, to a test of the high here from last August, which is around 13,700. If we look at an even sort of longer time horizon, the fact that we broke out of what is arguably you could say is the 2022 downtrend earlier this year. A lot of people thought that was quite bullish. The fact that we're now out of that downtrend doesn't mean we're going to immediately go back to test the all-time highs here set in late 2021, but it means that we could sort of have a choppy grind higher, as we've seen so far this year, to be honest. Finding support so well here at the 200-day moving average when we retested it in late February and early March is also another strong bullish sort of, or you could say long, medium term bullish technical tailwind, just like the golden crosses. So I'm thinking this is pretty much the trade idea that I'm sort of monitoring, that it could happen, that there could be a break higher towards this 13,700 level, which, by the way, is actually also a very important Fibonacci level. It is it's actually a little bit above, but it's pretty much in line with the 50% retracement back from last year's low to the 2021 record highs. So a push towards this area, around 13,600 to 13,700, I think is on the cards. Now, fundamentally, what's going on? Well, actually, and this is a headwind for the Nasdaq 100 index, which is generally big tech stocks, which are growth stocks, which are sensitive to yields. We've seen yields pushing higher in the last couple of sessions. We had a break above this short-term downtrend in the 2-year, 10-year also moving higher in a similar manner, but above the short-term downtrend that we had been in. Why are we seeing this? Well, some of the data we've had recently was a little bit more mixed, showing that the US economy is perhaps, not stagnating as much as we thought. And also the Fed speak that we've got in the last couple of weeks, or the Fed speak that we've had, maybe there won't be too many more rate hikes after the expected rate hike next month. But Fed members have been pushing back quite hard against the narrative of rate cuts later this year. Now, sort of the narrative that was going around that was, the mainstream narrative, you could say, was that, with all this tightening having happened, the delayed effect of that slowing the economy and sending it into a recession, and then the compounding impact of a tightening of lending standards in wake of what happened with the banks, or with a bunch of banks in March that went under, sending shivers across the banking industry and essentially forcing them to sort of tighten their purse strings and lend less, and that's obviously bad for economic activity. The idea uh, is that that was probably going to lead to a recession later this year. Now, I still actually do subscribe to that view, um, but for now, yields are pushing higher instead of breaking lower, which I thought was probably going to be more likely. But you got to respond to what you're seeing in the market. Now, this is a headwind that could prevent the Nasdaq from popping higher in the short term. But you got to say, considering the move higher we've seen in yields, the fact that we're still going sideways within recent ranges is a sign that actually this index is perhaps quite resilient to this move higher we've had in yields for now. Um, we've seen the start of earnings season. It's been the big banks so far, which isn't really super relevant. I mean, it's always relevant for, the economic outlook and everything, because banks and their guidance is important. But this is an index of tech stocks basically. So the earnings we've had so far this earnings season, not that relevant. But we will be getting a lot of these big tech giants reporting earnings soon. And if that's a good earnings season, if it exceeds expectations, if yields do head lower again, um, we've got data. We don't have too much this week really. Um, just the flash PMIs are probably the most interesting US data. Philly Fed Manufacturing Index later this week would be quite interesting, I suppose. But if we go to next week, actually, the only interesting thing is the core PCI. But if that's deflationary or lower than expected, like recent other inflation reports, and then in the beginning of May, if the next round of ISM data is weak, like the last one was, and potentially if we get further softening in the labour market data, then narratives about an oncoming US recession and the Fed rate cutting cycle could come back. We could see yields moving lower again, and that could continue to support the Nasdaq 100 basically. So the fundamentals are potentially there for a continuation higher of this medium-term uptrend. The technicals are certainly seem to be there. So yeah, I'll stop rambling on. I think you get the point at this point. So yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.